Welcome to TradeTheMBI.com. This is John. This report is for the 28th. And well, there we had a little bit of bounce back. We saw it on the intraday readings. We're still not getting much activity from the daily other than the rising short-term buyers and mid-term buyers coming off that oversold. The key with what happened with, though, the turnaround in the red here, we didn't even get to oversold with it from a DOC reading, but we did from the extreme histogram, which means that we might have a little bit of pullback into it. But again, it proved that that 98 level was an accumulation and boosted right back above. What did we get for a high on that? Just plot that up here. All the way up to 2509. So that was a pretty decent move. And again, this becomes now 25, right? Well, we're at 97 on the ABM, which I think represents a good support line there. The reality is we had the shakeout moving. We got just to a negative and immediately popping back above. So that's key. How long that will be sustained and whether we can take out this previous peak, I think remains to be seen. I know there was a lot of positive buzz on taxes, and that may have led to it, but that's way early in that process. We've learned this Congress has not been able to get virtually anything done. So it could be wishful thinking, but we'll see how many people are really motivated by it. And you can see the NASDAQ, despite the Dow and ES making new highs, still lagging. And it's probably more reflective of the fact that Apple had been overweighted in the situation and not performing quite well. This is also going to put a little more pressure. Not a lot. We're still way upside the range. The euro fading back a bit. Not a surprise. We had a lot of these short signals come through as it was trading counter to that, but clearly starting to feel a little bit of that weight. I would think that now we're looking at that high 1.6 range would really be the test point to whether or not we're going to return all the way back. To probably a more reasonable level, but getting very close to that range of 115.5 range to 109 is probably more indicative of where it should be versus where it has been. This has been a hilarious kind of situation for quite some time. Not only did we expect the lows to get taken away, we were still looking for well below the 120 range, all the way to 113 for TLT in the broader spectrum, because this was an unsustainable move and huge gap down, quite dramatic. Reflects that, inflation, for those who couldn't see the shift in the dynamic of pro-growth, you could just throw into the tax relief, just lower regulation, that it was going to stimulate and drive, and then you throw in the reduced immigration and tightening of labor supply. It was a guaranteed built-in for both, I thought, gold as well as reduction in. There's just no yield there, and it's going to get worse as inflation rises when you're already talking about it. So there's nowhere left but for interest rates to rise. The question is just how fast. They've already gone ahead of where things were economically, which was probably a good opportunity for the Fed to go ahead and do that. But going forward, can they really get away with it with what it's going to do to the deficit numbers? That's really going to be the question. We saw this with our oil builds all the way back over here when this first started. That was going to be our first clue that we were seeing it. There was a little uncertainty that developed, but the broader spectrum of growth was clear, despite hurricanes and everything else turned out not to be as dramatic. Gold, while it may suffer intermittent resets, the reality is that was just a retrace of the dip below the red line. It should show some positive results coming from this as it begins to recognize that, in fact, I wouldn't call it a bug, but some healthy inflation is reasonable. I know the Fed's target, but they don't really measure inflation as it really is for real people, so it's a little bit specious to use that as an example. Needless to say, it's, I think, positive for growth aspects, which is only going to help drive this market, because this is what we were talking about. The reason we're at 25 was a change in the understanding of what inflation would mean, and the market was going to have to respond to that. for devaluation purposes. So here we are. We got some beautiful buys on this setup. We had a nice run, ended up with a huge short. It was a beautiful signal for the downside turn. And then boom, the new signal came right above the long algo. It traded flat for a while, and then boom, just a series of it shot all the way to the peaks. And again, we ended up with a series of shorts a little early because no cyan move. Again, a little early, but then right here as the cyan breaks, it takes another dive right back down. I don't believe it was quite the 50%. I'd have to put the fib level line on, try to keep the chart a little cleaner here for you, even with all the ABM lines in that, but let's start to reduce that here as merged a couple of the programs. I think the long short is going to go right into the ABM, so that will become even easier as we just blend into fewer indicators just to give the simplicity of the chart and make it look clean. So it just aids in the understanding of it, but been very effective with some of these readings, and the setup here really worked out well. For those a little more aggressive, yes, once you reached 13.5 with the red on the DOC, you can start thinking about shorts when you're up at this peak, and then clearly once that yellow dips below the red at that particular point right here, you already were starting to get an indication that this is either going to trade sideways or start heading lower, and of course breaks below the ABM yellow at that particular point. What I was interested in is the rising of the Azure line at these particular points when a short signal comes through at the plus 13. I'm going to be doing a little testing on that to see if there's any correlation there. Could even be related more towards gold at above zero level. So those are the kind of things to look for when doing my testing. Some of these have correlation factors, and it's worth looking at them to add to the signal quality. That's all we really want to look for is signal quality. As always, though, trade well. I'll continue to post on the Skype chat and finalize some programs for next month's indicators. Trade well.